Good morning and happy Monday from Chicago traders. Thanks for joining me today on the 21st of June 2021. This is episode number 2018. My sound should be coming across nice and crisp and clear today versus what the debacle on Friday where Windows actually selected the laptop mic instead of the mic in front of my face, and I wasn't aware of that. So that's fixed. Anyway, again, this is episode number 2018. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So let's bounce right into the pre-market summary sheet here, brought to you live by Convergent Trading. So what are the key drivers here? We're seeing that the overnight risk sentiment is bullish. We are pushing the Russell's pushing 1% higher, up 21.9 points, with the Dow Jones pushing 0.71 or 235 points. The DAX and the Euro stocks looking strong as well. The S&P up almost 20 points. The S&P is back inside of this key balance area, key balance zone in the 41.73.72 area. Crude oil, which has rolled to August, by the way. Those of you who are trading crude is now in August. It's a Q1 or Q21. Gold, crude is off 0.5%. The treasuries are off. The Bund is off. Copper is off. The dollar's off. And the British pound is pushing higher. British pound responding to comments from the Prime Minister of the UK, Boris Johnson, stating that there's evidence that restrictions may be lifted sometime at the end of July, I believe is what the comment was. And then crypto having a lot of volatility, with Ether taking a bit of a beating as the PBOC, the Chinese central bank, cracks down on crypto. So that's where we stand. Crude remains in demand, showing summer driving is really pushing prices higher. And of course, the market remains attentive to inflation and interest rates and what the Fed is going to do. I believe today, let's see, we have Secretary Yellen, Fed Chair Powell, and Gensler, who's... what is he? I don't remember. But an important character in the market. They're all meeting with President Biden today to discuss where we are. So we'll see if anything comes out of that. Again, risk on sentiment. The rotations have diminished further. ES standard rotation is now 4 points. 4 points. NQ has dropped from 19.25 to 18.25. RTY has dropped from 4.3 last week to 4.2, YM from 38 to 33, and crude has risen from 0.2 or 20 cents per rotation based on 1 minute data to 21 cents. Note the ranges as well. The volume today, 306,000 contracts in the S&P so far, which is quite high. We've modified the sheet so that it highlights when volume exceeds and the range exceeds the mode at 306 is well above 250,000. Volume's quite heavy in the S&Ps today, which is kind of nice coming into a Monday. It portends or maybe predictive of an active session today. We have 50.75 points of range already in the overnight session, much higher than what we would call the mode at 31 points. So again, this is telling us that there's a high potential for continued price discovery during the session, which means opportunity for all of us. What's on deck today at 10:15? we're looking for ECB's President Lagarde's speech. And at 3 p.m. Eastern, we're looking for U.S. Fed Williams speaking. Again, I encourage you to follow Convergent Trading on twitter.com/conv trading to get this snapshot of the pre-market summary sheet and other trading related notices. Again, twitter.com/conv trading. And if I'm stating something during the broadcast, terms that you're not used to, just go to ct.pro/glossary-terms to get an understanding or an explanation of the different terms that I'm using. Let's bounce into the review of Friday's actions. So let's maximize this. Friday, the primary scenario is looking for the market to be, because we were, because of the imbalance, the inventory imbalance, expected it to bounce higher, was looking for around 88.90, 95 is up here, is this stock zone. 88.90, I was looking for it to drop through the overnight low. That's the first key target, big area, single prints and so on, to close those for the session. Actually, the single prints were a little bit lower. The single prints were right there. And then I was looking for it to break through and potentially go to 65 as a key target before the bounce into the close. Why? Because we were looking for a continuation. In either case, we were looking for a continuation of the trend day profile in the overnight session, and the fact that we are one-time framing down on the daily. So the fact that we dropped in the overnight session was looking for it to have a continuation before the bounce. This is a normal behavior. The secondary scenario is a drop through the overnight low of 73.50 and then finding a bounce point back into 95, potentially 05. The third scenario, which ended up being the key scenario, is a push into 88.90, a squeeze down into 95, an impulse down into 95, and then targeting 41.45 as the key balance zone. I'll show you very briefly. Look, I'm making an effort to make these shorter, but there's so much to discuss because there's you guys are made up of a variety of traders, and it doesn't hurt to refresh. So I need to explain things a little bit farther so people don't join in and feel like, what is this guy talking about? So the 41.45, I'll show you on a chart where this came from, but that ended up being the key scenario that played out. Here's where we are. So we're looking at a 4-tick Renko chart, very busy trading session. It opened down here at 41.75.75, and we had an open auction out of range. So in an open auction out of range, what we want to see is, it's really important to see if the market is then going to move towards the last auction. Is it going back into the prior range? Very important. When we open out of range, there's a very important piece of information that's being shared with us, and that piece of information is that the market is out of balance. And if the market's out of balance, does it go back and accept the prior pricing, or does it move away? So we're looking for how it performs in the first hour, statistically speaking, historical probabilities. If it doesn't close that gap in the first hour, it has about I believe it was a 72% probability, historical probability, that it would not close it for the rest of the session. And so I'm looking for, does it open, chop around, and then become responsive? Since we opened below, does it become responsive and go into the prior range? Or does it sit sideways and start to fail to the downside, in which case we are selling. And that's basically what we saw yesterday, or Friday. So we sat sideways. Friday, unfortunately, was clouded by the quad witching event So it's a little tricky to trade, but back and forth, outside in trading. And then we breach the IB low. Cool, that's a good sign. Now we're looking for how does it behave around VWAP and mid for the RTH. The VWAP mid for the full session are too high up. So not very good reference points on the short side just yet. And then it breaks through and it makes it very, very muddy to trade this. Later in the session, we have this small double top with a break below lower high, creates a small opportunity, an opportunity for a scalp short, aiming for the 41.55 and a 41.45 beneath it. So overall, we end up kind of pushing down on the close. On Friday, we had a double distribution profile, though the lower distribution is questionable. Really, Friday was mostly balanced until the close, and it pushed pretty hard through the close. It pushed through a key low volume node at 57 and closed beneath it. There's the 45. Look at it. This protrusion here in a composite. This 45 used to be the 41.55. That is the most traded price going way back into April, I think. And this is the key balance point, and that's why it's a target. It missed it by just a hair and got it after the reopen. Here's by the way, delta being back to normal as the market traded mostly under the open. The opening prints right here, this green line. As the market traded below the open for much of the session, the delta was relatively strong. It supports the outside in trading, the poke of lows, new lows back to the middle, new lows back to the middle, of course, until the end, at which point it would result in a loss. But for the majority of the session before that, outside in trading did pay off. So carrying that into what happened in the overnight session. We break off down here. We put in some single prints in this what is it, like 41 set, I don't recall, 41.6075. That's the break point, 41.6075 right here. We break down into the close, and then immediately after we reopen, which is 3:30 my time, 4:30 Eastern, we push into the 45. We push right into the 45. But in either case, a pretty weak close. Expected it to continue lower. It consolidates. It consolidates on the 6 p.m. Sunday evening open Eastern time, and we get the extension, which is expected with a close like we saw on Friday. We expect a continuation lower. We push down into 26.75, and then from there, it's really rally time. The Europeans come in and create this this bar, this strong push. So this is Europe open, strong push, consolidation, and then continuation. We end up with a double distribution or multi-distribution profile with a key area right here at 41.60. That area is going to be pretty important to monitor. Coming into today's session. So what we have today is a larger time frame. So this is a 30-minute bar chart here, a larger time frame, impulse, consolidation, looking for a continuation trade. Wouldn't be surprised to see it back at the 41.90 in the areas that I talked about on Friday, 41.90, 95, 42.04. And those sorts of areas, okay? The overall delta is negative, though, on the overnight session. And as you recall from the Convergent Trading pre-market summary sheet, the overnight inventory is negative, is actually negative. It's down 50, it's positive 57%. so 57% long. So with the distribution, now it's comparing it to the prior close with the distribution of what's beneath versus the amount of volume above the prior close. We have volume that is more volume on the buy side above the close than beneath it. So I expect that this is not going to result in a huge correction on the open. In other words, a push down on the open, and I suspect that it's likely to fuel further movement upwards. On Friday, we had 1.49 million contracts in a day session. We generally do about a million. Lately, we've been doing about 900,000. So the volume is there from Friday that would help carry us to the upside. Again, the upside targets initially 41.85. They go in fives for some reason. 41.85, 90, 95, and then 42.04 above there. So let's look at the composite for a minute. Here's the composite. And here's where we were before last week. You see that 41, 45, 50? That's where that comes from. It is from the gap higher on the second day of April. It's from the gap higher. And from there, all this trading that occurred over the last 2.5 months or so, all balances out at 41, 45, 50. And then what we do is we push a little bit higher. Based on Friday's action, we push the point of control higher into where we are now, which is 41.72. So that point of control is shifting to 41.72, but I'm keeping it there because it is a very high volume node. So the area between 41.75 or so, all the way through to 41.45 is just become a massive high volume node here. So you got this big acceptance area here. We spend very little time after making new highs. We spend very little time up there before we sell off, and that's what we saw last week. Last week migrated the high higher, migrated the point of control higher, but it ended up pushing the lows back through. We took out the lows of the last 3 weeks, and overall the one-time framing on the weekly is neutral now. It is we got to take our foot off the gas on the buy side and see what happens next. And I believe today is likely a push to close that gap from Friday and to retest that 4,200 again. I expect that'll likely be the run of the week. So this is an important kind of week this past week in that it tested above for new all-time highs, but it also made a lower low. You could see we did the same back here, and then we immediately rallied at the end of that week. But overall, we tested the high, we put in new all-time highs, we tested the low, and then we ended up with a couple of weeks of just kind of sideways to selling-ish action. So I'm expecting this to climb a little bit, struggle, and then potentially push down. Again, we'll see by the end of the week what happens here. So that's that. Let me jump into what's expected for today and let you guys off. Something we didn't do on Friday. Where is it? 1 second. I can't do it today. So I was going to do the where are you from thing, but I don't see the graphic here. Okay, so what are we looking for today? For today, very simple. Very simple. Looking for an open auction in range against the prior point of control. Note that the current point of control is on top of the prior point of control. So the prior point of control is 41.7275, and we have just shifted the overnight point of control to that area. The market is going to open in balance on top of the prior range. Open auction, I'm looking for it to fail to the downside, to balance out, attempt to push lower down into the 41.60. So this 60 area is going to be important. We want to see if it'll hold the 60. There's a single print from Friday there, and it's free to fall all the way down through 41.52. 52 down here. Okay, settlement on Friday is 53.50. So I'm looking for it to open up, push back into 60. I'm looking for an impulse back up into the overnight point of control, and then for it to climb through the overnight high at 77.50, and then I'm looking for a push through the gap zone that was left at 85 to squeeze it higher and start pushing a lot of the volume that occurred on Friday, have that sustain the move up, looking for some short covering back into the 41.90, 41.95 area. So that is the primary scenario for today. If that scenario doesn't play out, we're looking for an open auction to push 41.77.50, consolidate up here, get some sellers back into the overnight point of control, and if it tests that 41.60 later in the session, not early on, not the first test, but later, it is likely to fall through to 52 and bring us back into last week's close at 52 or so, consolidate to rally into the close. This is what I'm looking for today is the two key scenarios. So I'm going to sit here and watch what happens on the open, what gets tested first, how good a test we get, and then that tells me which side I'm going to join the fight in. So if we test lower and then it just starts to print on the bid but not move, then I'm looking for a pushback to the overnight point of control. But the important trade is for it to push through the overnight high and squeeze into 41.85, giving us about 20 points of potential there for about 4 points of risk. Very reasonable. And then the other side is push the high, fail to stimulate any further buying. And if it fails to stimulate any further buying, then the buyers are going to weaken, and then they become sellers, and the sellers are likely to take over all the way down to 41, 45, 47 potentially. Good luck, and I'll catch you tomorrow morning. Take care.